What are you expecting from this report? And then also, what are you expecting from the call with CEO Mark Benioff, who's often been very candid about challenges facing the business?
Yeah, he's candid. And, I think really here, all investors, and of course, us included as a shareholder, we really want to, this is the show me quarter. It's a revenue quarter. We need to see this time, revenue really exceed or at least meet the expectations that you just outlined. As opposed to the cost cutting efforts that have increased the margins for the last 18 months. They've really kind of grown earnings more by cost cutting in the last, let's say, year and a half, where revenue and sales was sort of the back seat. And we think that this is the quarter. We really want to be looking at that top line growth. Are they able to leverage a lot of these new products they have and that very big customer base and get that revenue number to, kind of at least meet that 11% number that the street expects, but even more.
So you're mentioning new products. That includes AI cloud solutions, and of course, it's Einstein AI chatbot. What are you expecting when it comes to that? And what metrics are you looking at when it comes to demand? A lot of people focus on current remaining performance obligation. Is there one that you're focused on?
Well, that's definitely one of them. You want to make sure, that number, which a lot of companies this quarter missed, right? On that customer, paying this for the rest of the year, as some people are cutting back budgets, right, with the uncertain economy. So that's going to be one of those metrics. But, again, this is a very big installed base they have. And we're very curious, not only in the numbers of the revenue, but in Mark's and the team's comments on the conference call. Where is that revenue coming from?
Right.
They have as you mentioned, cloud-based but AI-driven suite of services now they didn't have before. And this large installed base is now going to be learning more using AI, leveraging AI for their sales contacts, customers, data going forward, the platform itself. And then, of course, you add on those acquisitions that they've made, which were very accretive.
You're leading me, James. I want to talk acquisitions for a second. So remember, they acquired Slack for almost $28 billion back in 2021. They made some other acquisitions. At the same time, as the company's made more acquisitions, we see some executives leaving. Co-CEO Brett Taylor left, now Lydia Annie Jones, who was the CEO of Slack, leaving. Does that concern you at all, the fact that we're seeing executives leave?
That never makes us feel comfortable. But on the other hand, the management team led by Mark, we think is maybe one of the best in the world, particularly in the CRM world, relative to Oracle and Microsoft.
Right.
So we're not as concerned about those departures. In some ways, it does make sense after they've built those businesses and they've been bought out. So we would not be concerned about that. And we do, as I was mentioning, think that now these businesses are accretive.
James, I got to ask you one other question. CRM, Salesforce, trades at about 25 times forward earnings. That's lower than the NASDAQ at 29 times, but higher than the S&P at 20 times. What do you need to see here to add to your position? Are you thinking about maybe just taking some profit right here and trimming your positions? How are you viewing things right now?
I think this is the show me quarter. I think investors should own the stock here. We certainly going to hold our position. And where expectations are that they're going to beat based on this AI cloud transformational experience that their customers are going to get.
Right.
And you're right. The stock is cheap relative to NASDAQ. It's cheap relative to its earnings growth, which is above 30%. And it is still 30% off its high. So we would suggest if you don't own it, you buy some here and you add to it into weakness.